Hi everybody, Boris, BK Forex. Welcome to the commodity dollars for August 5 to August 9, 2019 for Aussie dollar, dollar CAD, and Kiwi dollar. And the com dollars are really going to be center stage this week as far as economic data goes. Two, not just one, but two central bank decisions, both the RBA and the RBNZ, are going to take center stage. So be watching that very carefully. And we finished the week with important Canadian data as well. So there'll be lots of opportunities here, I think, for some interesting trades on the commodity dollar front. The commodities got very, very badly hit by the end of the week on all of the China trade flow news. Aussie came down to 67.50, very, very low support. Dollar CAD was probably sort of the better of all the three. It got rejected off the 32.50s, came back down. And Kiwi dollar also now 66, 64.50 support, really, really testing the low end of its support for the full year. After the Aussie actually broke the low of the year, after clear fears here that the global trade war is going to make these, especially Australia, the primary victim of slowdown in Chinese growth. When you look at the calendar here, there's a lot of data on the com dollar side here. First of all, we get the services index on Sunday night, Monday morning to you guys. Then after that, the really big data set before the central bank decisions is the New Zealand unemployment rate. And this will be interesting because obviously if that comes in weak, it's going to essentially spike speculation that the RBNZ is going to cut. The market is already expecting the RBNZ to cut from 150 to 125, but that will almost ensure that the RBNZ is going to have to loosen monetary policy as we get into the next day. The next day we'll have the RBA cash rate decision and the RBNZ decision. RBA is expected to stay stationary, but perhaps telegraph that they're going to do something else in September. And the RBNZ, what's interesting here is, even if they do cut, the interesting question is, do they perceive this as a beginning of an easing policy? Do they see this as a seriously necessary move here, given the slowdown in global growth as we go forward? Then into Wednesday, we get the Ivy Purchasing Managers data. Here we're kind of bearish that data set because of drop of prices in retail sales. And then into Thursday, we have RBA monetary policy statement. Here again, guidance on what they will do going forward into the September meeting. It'll be interesting to see. They could also surprise and cut 25 basis points now. I think that'll be a shock, and that will take Aussie to 65. But I doubt very much that that's going to happen. So we'll be watching that very, very carefully. And then into Friday, the final big event in the com dollar land will be the Canadian employment data. Here, we'll have to update and see how the PMI prints. But we've had this, what's interesting here, I think, in some ways, and the story is just not getting nearly as much play as it should, is the fact that the Canadian economy, of all the G7 economies, has been the strongest. And more importantly, the Canadian monetary policy at this point is the most hawkish of all the G7 monetary policies, in the sense that they are not in any rush to cut rates, especially with the housing markets still providing a very, very bubbly environment in both Toronto and Vancouver. So if you get the situation where the BOC just doesn't budge and everybody else is cutting, that's got to reflect positively on the Canadian dollar eventually. But for now, it's gotten basically waylaid by oil price declines and by the general risk-off sentiments. So I should be watching this, especially if we get a positive employment data set. This kind of divergence between a relatively strong and well-balanced economy out of Canada and everywhere else in the G7 universe should really provide Canadian strength going forward. So I'll be watching that very, very carefully. Now, looking at the charts here, Aussie dollar. Aussie, fresh lows, but we did bounce back. This was like the first, I think somebody made a joke that this was the first day in 5, and it closed by 1 pip from the prior low, and that makes it a positive day here. But still, we're certainly holding just above the fat finger lows from the start of the year, and that makes it very vulnerable for further downside. We're clearly very stretched away from the moving average, but a lot will depend on where the central bank is guiding. If the central bank really acknowledges the fact that global trade war is a existential threat to the Australian economy, I think you're going to see the market get very negative Aussie, and ultimately a lot of the banks on the street are projecting 65 for the Australian dollar, ultimately in order to kind of rebalance against the trade weakness, and that could very well be the story. So even though we're kind of grossly oversold, the trend is very much down. whatever bounces we get are probably going to be short the bounce stories. And ultimately, we could get more downside momentum here if the RBA is dovish. Dollar CAD actually, on the other hand, is a lot better. It's going to hit a nice turn here, double doji turn at the 3250s. Looks like it could trade its way back down towards the 31s. And again, as I said, the big story will be Friday's employment report. If that's strong, we could even potentially see 130 against a much weaker Kiwi and a much weaker Aussie. So there'll be a big divergence between Canada and the ATPDNs. So here's Kiwi, the final one. Kiwi traded better, looks better than the Aussie in the sense that it holds highs or holds the lows here, and could essentially the charts don't look nearly as bearish as the data set here goes. So we'll have to see. To me, it's very tough to trade this ahead of the employment data, because that's really going to be a big driver. If that employment data is weak, I think this low is going to go. They're going to take out this low, and the RBNZ could then telegraph maybe even more cuts, and we could see 64. On the other hand, if the employment data is relatively decent, you may want to just take a pop right in front of the RBNZ, because even if the RBNZ cuts, it could very likely be one of those, one and done or one and wait and see type of a communique, which will be positive for Kiwi. The thing that's interesting about Kiwi from the chart point of view is that the chart is kind of telling you that it wants to go back towards the 66s. The fund is just too volatile to really want to take a punt in front of, but we could get a halfway decent move positioning trade in front of the RBNZ, depending on how the labor data goes the day before. So wish you guys the best luck, the best of trading. That's how the COM dollar shape up. Boris, over and out.